Hi guys, Kayong here. Welcome to another weekly video. Right, so let's jump straight into today's sharing. So basically, again, the process here is that every week when we start, or we look into the Forex factory calendar to take a look at what are some of the focus that we need to pay attention to for the particular week. Alright, so if we look into this week, right, Monday start off, which is today, start off with a lot of Euro news coming from French, both PMIs, German as well as Eurozone as a whole. Alright, so it's pretty important to look at the Euro PMIs because they do provide certain economic performance indicator for the entire Euro itself. Tuesday is the focus will be more on various central banks speaking. Alright, we have the SNB, the BOC, as well as BOE and ECB. Alright, so even though these are not the main conferences and speeches, but it's still important to keep an eye on because these central bankers might drop certain hints or clues as to what is their future monetary policy, right? And that might determine the current sentiment shift in the market itself. Wednesday focus, alright, will be on the Aussie CPI. Alright, so last week we did have a disappointed data coming from the labor market, right, and that causes some sell-off and selling pressure on Aussie. Alright, so this week's CPI will be key because the estimates is at 0.5. So anything less than this, we will see another new wave for selling pressure coming into Aussie. Alright, so take a note on this. On Thursday, we do have the US core durable goods. Okay, it's not the tier 1 data, but it's still important to take a note on that. Alright, previous data was revised upwards to negative 0.2. This time round is expected to come in very positive. So again, whether the actual will miss the estimate or be better than it will definitely give some short-term sentiment on the dollar itself. Friday is pretty quiet as well, but just some focus on the Japan, Tokyo core CPI and household spending. Both are expected to still be in the negative territory. Alright, at this moment, economy of Japan might not be the key driver in the yen, but it will be really on the risk environment. Alright, so just pay attention to this. And later part of the day, we do have US advanced GDP coming in, expected to come in very positive at 2.5 versus the previous data 1.4. Alright, again, advanced GDP might not be the most market moving and doesn't cause much volatility in the market because this is actually the second information. If you click into this, right, you can see that the first one, which is called the prelim GDP, will be actually also important. Alright, so this is advanced is actually earliest and it's pretty important. Alright, but it's not like those tier 1 data. So take a note on this for Friday as well. Alright, so let's jump into the chart to share with you some of the process that we do to analyze the market. Alright, I will share with you three currency pairs and 3 potential setups for this video itself. Right, so a quick one. If you look on Euro Dollar, this is on the H4 time frame, right, you can see what's happening was that previously it was a huge consolidation over here. Alright, price is consolidating in a downwards triangle pattern, and after that price broke down. Alright, and then it did a very small minor consolidation, right, a retracement over here, and then it broke further. Alright, so what we are looking at right now is currently is in a downtrend. Alright, no doubt about that. The downward momentum is pretty strong. Alright, so what we are looking out for is, do we have any opportunity to follow the overall trend? Alright, taking into account the fundamental and sentiment as well. Alright, and of course this is a huge confluence between the sentiment currently, which is a selling pressure, as well as technically what we are seeing on the chart. Right, the only downside here is that Euro economy, it seems like it's improving. Alright, so that's why the PMI's data later will be key on the Euro performance. Alright, so what we see over here is that we do have some minor structure piling up over here, and if we pull in our Fibonacci tool, right, from the recent swing high to where the price is at the recent swing low, and if I just put in my right levels, right, you do see that this 61.8 Fibonacci level comes in very close with our previous structure here. Okay, if I just draw this in, okay, you can see that this is a confluence of previous structure plus a Fibonacci number. Alright, so with that, what we are expecting is for price to pull up, alright, a retracement back towards this area, and we'll be looking for a short opportunity at this area. all right, if price comes back up. And our stops, all right, usually what we do is we always tell traders that the stops needs to be where the idea then becomes invalid, and usually the idea becomes invalid at the most recent swing high, simply because if price break, right, so if price does this, if price break above it, okay, we are no longer in a downtrend because it has breached the latest high. Okay, so our stop will be around this recent high plus a little bit of room for price to move around. Alright, so if price breaks above this, it invalidates our idea, and our target will be at the previous low. Okay, so you can see that this kind of trade setup gives us a risk to reward of 1.28, so pretty decent. Alright, but according to my own personal style, I like to be very aggressive and putting my stop. What I mean is that instead of having such a huge stop loss, I like to just reduce it to the next fit, alright, and give it some room. So I straight away increase my risk to reward to 2.35. Alright, again, this is something that you need to understand why you are doing it. Does it suit your trader's profile, your risk profile? Okay, so do not just blindly follow, but what I want to share with you in this weekly video is to share with you the process, right, and some of the reasoning that we are doing it. So hopefully you understand that and you can craft something and adapt something for yourself. Okay, so just by general rules, alright, we usually put it above that. Okay, so this is for euro dollar. We are looking to take a trade at 1.097. Alright, depending on when the price comes up, depending on the current sentiment and fundamental, is it still remain intact? Alright, so that's important. The next one I want to share with you is dollar yen. Okay, so yeah, I already did some charting on the chart. Alright, I'll erase it and I'll show you what's happening. Right. Okay, so if you look at dollar yen, alright, if you look at this time frame, basically this is the previous recent high. Alright, previously it has basically in a huge consolidation area. Alright, it went up and then it consolidated a bit, reversed, and then it consolidated a bit and then reversed back up. Alright, so if you focus on where price currently is, it's definitely in a consolidation area. Alright, you have price moving in a lower high as well as forming a higher low. Alright, so in such consolidation area, eventually price will break up. Alright, it either breaks above it or it breaks below it. Okay, and some traders say that because previously it's an uptrend, this is a continuous pattern and etc. Yes and no, because sometimes it does follow suit, sometimes it doesn't. Alright, again, you need to understand what moved the currency market is not your chart pattern. Alright, what moved the currency market is a combination of, yes, technical analysis, traders look at it, that's why it moved according to it. But more importantly, it's the fundamental and the sentiment, alright, because that's where your central banks and your big boys are playing with. Right, so with this, right, what we have are two potential levels. I'm also looking to take opportunity to the upside, alright, simply because of the fundamental and the sentiment on dollar is strong. It's the only central bank that is actually looking to tighten monetary policy, increase interest rate. Alright, all other central banks are talking about easing and reducing interest rate. So that's the part where if you understand all this, you have a very clear bias as to where you want to position yourself. Right, so if I just pull in my Fibonacci tool from the recent low over here to the high here, alright, we do see that this retracement comes in at 786, right, and this gives us a valid potential pattern that completes at 127 extension, right. So if I drop a horizontal line over here, that will be my area of interest, and if I just zoom out, right, okay, that's a little bit too much, but if I just zoom out into this scale, you can see that though it's not a very strong support or resistance level, we do see some form of reaction in the past as well over here. Alright, some over here, price consolidated around this area, it rejected off this area over here as well, some reaction. Right, so we do expect that in terms of support and resistance, if price drop towards 102.3, it might present some opportunity for us to look for a long opportunity, right, for a long setup. Another one that if I pull my fib, alright, instead from that low, alright, I just change it a little bit over, alright, sorry, same low, but I take the different retracement over here at 61.8. I would have another setup, alright, and this setup, I would pull my fib from this point to this point, right, and this setup will be at the 127 extension as well. right? The price level is at 103, right? So you see few confluences. One is a Fibonacci extension. The second one is the fit level, as well as the price level of 103 is a very strong psychological number. It's a whole number. And if I zoom out a little bit to look at the support and resistance level, you can see it's a pretty decent area as well, right? We do have some form of reaction over here, right? Low price broke it 2 times over here. We do see some form of reaction over here, reaction over here. Okay, so again, if price comes down towards the 103 level, we do have a potential setup, all right, to look for a long. All right, so this is the two key levels that I'm looking at. One is 102.98, all right, the other one is 102.3. Okay, so these are the two key levels that I'm looking out to long the dollar yen. Alright, I have another one which is Chef Yen. Alright, this one was actually analyzed last week, alright, but it's still playing out. So I'd just like to quickly share with you again on this setup that we are still monitoring. Okay, I would like to just pull it very small, right, because it's important to look at the overall picture what's happening. Right, you can see price is in a huge consolidation area. Alright, this is a huge range, right? But price is really just bouncing up and down, right? And we can see that the bottom level is supported 1 time, 2 time, 3 time, 4 time, 5, 6. All right. So what we are expecting is if price comes back towards this area, all right, not only we do have a horizontal support level, we do have a completion of a pattern, as well as based on Fibonacci at the 88.6. All right. So this 103.25 is no doubt a very significant support level. So what we're looking out for is if price continue dipping lower, we're looking for opportunity to long this. Okay, and if you look into the current fundamental and sentiment of franc is not too much, alright, but if you look into the COT of Swiss franc, okay, it's actually aligned in that traders, right, huge traders are actually building up a position on long. Right, and of course this one, because it's a pairing, it's the Swiss against the Japanese yen. When price hit at this bottom area, we need to also consider and take into consideration what is the current sentiment of Japanese yen in order to long the Swiss franc yen. Right, so this is something to just share with you quickly. Some of the top process, some of the potential setups to look out for. If you have any questions, regarding trading, regarding FX market, feel free to drop them in the comment section below. And if you are the first time watching this, alright, we'd like to welcome you, and do click on the subscribe button, because every time we release a new video, you automatically be notified on YouTube, right, on our channel itself. Right, so other than that, always follow your plan, right, manage your risk, because as traders, it's not just about profit, it's about taking a good trade every time we do it. Alright, so with that, I'll talk to you on next week video, and if you have any questions, again, feel free to drop them below.